The opinions expressed by Karen Scott Mims and the guests on this podcast are their own and do not reflect the opinions of this podcast platform. All statements and opinions expressed are based upon information that's considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Investments involve risks and, unless otherwise stated, are not guaranteed. Past performance cannot be used as an indicator to determine future results. Any strategies mentioned may not be suitable for everyone. Information expressed does not take into account your specific situation or objectives and is not intended as a recommendation appropriate for you. Before acting on any information mentioned, please consult with a qualified tax or investment advisor whom you have specifically retained to determine if it's suitable for your specific situation. This podcast is designed to provide accurate and authoritative information with regard to the subjects covered. Investment advisory services are offered through Brookstone Capital Management, LLC, a registered investment advisor. BCM and Harbor Point Wealth Management are independent of each other. Insurance products and services are not offered through BCM, but are offered and sold through individually licensed and appointed agents. Income regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products. Insurance products and services are not offered through BCM, but are offered and sold through individually licensed and appointed agents. Income regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Fixed insurance products and guarantees are subject to the claims paying ability of the issuing company and are not offered by Brookstone Capital Management. Most people simply ignore taxation through the 4 phases of your wealth. Instead of understanding the 3 tax buckets, you arrive at retirement with a huge 401k in the tax-deferred bucket and ignore the taxable and, most importantly, the tax-free bucket. How can the middle-class millionaire, average Joe and Jane, be so unprepared about how to protect their wealth using tax loopholes like the wealthy 1%ers do? Easy. Welcome to the Tax Smart, Tax Zero podcast. This is a show about tax-free wealth. Financial advisors sell rate of return. Annuity salesmen sell what else? Annuities. And part-time tax preparers sell a 1040 to submit on April 15th. But the real goal is to implement strategic tax planning. We invite you to take the journey and explore the path to the 0% tax bracket. It's time to divorce Uncle Sam from your wealth. And now, your host, noted tax attorney and private wealth strategist, Karen Scott Mims, Esquire.
Well, we have an absolutely fabulous show for you today. Our show is entitled, What the Health is 45 Doing? Yeah, well, let's take a bit of a moment to have an intro. Here we sit in the midst of a global pandemic, an oil war between the Saudis and Russia, a stock market that is having a very violent reaction to the coronavirus. Feds have lowered the interest rate, not the problem. There is a potential economic crisis as businesses slow down, shut down. Their employees are not going to get paid. And on top of all that, the airlines are asking for a bailout. While all of this is going on, the leader of the free world has declared, I accept no responsibility. In case you have just joined us, you, of course, are listening to the Tax Efficient Retirement Planning Show, another episode of Tax Smart, Tax Zero. I am your host, Karen Scott Mims, tax attorney, registered investment advisor representative, estate planner, accountant, and certainly my favorite role, private wealth and tax advisor. Our show for today is entitled, What the Health is 45 Doing? The necessity for an all-weather portfolio. So, right about now, let me introduce you to Sam. Sam is the reason that we are doing the show because he's come in and he's very panicked. Now, Sam has understood because he's listened to the show before. He understands the 3 phases of his financial life. The accumulation stage, the preservation stage, and the distribution stage, and certainly I will say the bonus stage, the wealth transfer stage, which is something that he's concerned about, and so we are going to address his estate planning needs. He also understands the 3 tax buckets, the taxable bucket, the tax-deferred bucket, and the tax-free bucket. So let me say to you that Sam is a federal government employee. He is age 60. He was all set to retire at the end of this year. And Sam is now kind of asking himself, is that still going to be possible? Now, we can kind of understand Sam by saying that in some ways it's simplistic. Sam has, for the last 40 years, had his human labor that served as his working capital, so to speak, for which he received a W-2 paycheck because he's a W-2 employee. And he either had 2 choices. How much was he going to save and how much was he going to spend? When it comes to the 1040, he took a very simplistic approach. He pretty much said, okay, on the first page, I know I have to put the W-2 wages. On the second page, I know that I make a decision. Do I take the Schedule A or the standard deduction? I determine the tax liability, and then I am ever so excited when I receive a refund, which of course is nothing more than a tax-free loan to Uncle Sam. So he understands the concept of the taxation on the wages, but what he doesn't understand and what he's neglected to address is the taxation that's going to happen in the distribution stage on the money that he saved in the TSP. It is far greater than he ever expected, and on top of that, he has not come to the realization, which he should have, that 60% of that belongs to him. He has $1 million portfolio, so 60%, i.e. $600,000, belongs to him. The other 40%, i.e. $400,000, actually belongs to Uncle Sam. He's never thought about that. That's because Sam has been focused not on the portion that he's been saving, right? By the way, he's been saving that in the TSP. That is his pot of gold. That, of course, is a portfolio that is totally self-managed. He has one goal, and that is how big, right, that he wants it to be, totally focused on growth. He has no concept of taxes. He's ignored that. Sam has pretty much said, you know what, at age 22, someone said to me, I need to put everything 100% in the C fund, and that's all that I need to do. Okay, Sam is obviously a little bit visually impaired, right? He thinks that wealth is something that you wear rather than something you have. When it comes to risk, if I had to ask the small, medium, or large, he's taking the extra large version because Sam just wants to have bragging rights about how big that TSP is. He's never imagined, and he has no idea that there's a correlation between the use of that money and the loss of the money. And of course, he just can't see past the C fund, pun intended. So I have sat down with Sam and asked him some very important questions. Number one, right? What's your exit strategy? Because the math doesn't lie. It has to serve as a source of income, right? That's basic math. Since safety nets aren't enough, i.e., Sam has expenses of $10,000 per month. Let's do the math. His pension is not $10,000 a month, okay? It has to serve as an investment. It has to have growth without being depleted, because certainly one of the things that Sam doesn't want to do is run out of money, but it has to be adequately adjusted for inflation of 3 to 5% per year. So let's fast forward and talk about the idea of being in retirement. It's a different scenario. I dare say it's a new scenario. The new scenario is that the working capital life is over. Instead of the working capital, now we're going to take your wealth and hope that it's sufficient so that you can live above the level that you were living in the accumulation phase. The only problem that we have, though, are that there are risks. So now Sam has, unfortunately, begun to see some risk that he did not see before. So we have the volatility of the stock market. We have inflation. We have the stock market risk in general, that your portfolio is not there, right? He doesn't see what he saw in the C fund. We have legislative risk, we have political risk, and we have health risk. But having not thought about any of this, you kind of wonder, how did Sam ever reach the decision to retire? Well, it's simple. He had met the age and years of service. In case you have just joined us, you, of course, are listening to the Tax Efficient Retirement Planning Show. I am your host, Karen Scott Mims, tax attorney, registered investment advisor, representative, estate planner, accountant, and certainly my favorite role, private wealth and tax advisor. So, right about now, I'd like to introduce the concept of the all-weather portfolio, and I'd like to ask some very important questions. So, in the accumulation stage, Sam followed a very simple methodology. You decide how much you're going to contribute to the TSP, sadly, in the tax-deferred bucket, right? You decide on what allocation you're going to have for those very limited choices, CSI-FG. It doesn't have a functionality, only has mutual funds to choose from. And again, he kind of gets bragging rights as a pseudo-financial genius when the 11-year bull run has occurred. But my question, in reality, the bull market has ended, okay? So, Sam, let me give you some advice. Creditors don't accept that they are not getting paid because the stock market has issues. So, the question really becomes, how are you going to generate a sustainable and consistent amount of fixed income, no matter what the stock market does? Sam, If your income is going to go up and down, so too will your lifestyle. I thought that you said that you agreed with me that retirement was supposed to be where you had a better standard of living. And my other question for Sam, how are you going to ensure that the new range in the portfolio makes sense, that it has a reasonable floor and a reasonable ceiling? Because you see, when Sam was in the C fund, he had a range, and it was an acceptable range for him of positive 50, negative 50. That was okay because he said, I've got 30 years before I have to actually use the funds. Well, Sam, do you see that things have changed? Because quite frankly, you said retirement is going to happen at the end of the year. So now Sam says, you're right. I kind of think that now I want a range of what? Say positive 10, negative 10, right? Meaning that he has a range in which 90% of the portfolio is protected, and he wants to be ensured that he's generating an 8% fixed income. Sam kind of realizes that he's ill-equipped to do this because, you see, the C fund is your answer only if the question is, what's the fastest way to grow the little bit of money that I have that I don't need for another 30 years and that's not going to be needed for anything for another 30 years? If the C fund is your answer, the question better be, what do I have to do in order to have a possibility of a positive 50% return, and realizing that I'm accepting a negative 50% return as well? Well, goodness gracious, as we prepare for break, I will say to you, if you are much like Sam, you are age 60 and older, you identify that there are problems that need to be solved. There has to be a match between the actual phase of your financial life, what you need the portfolio to do, how much of the portfolio you want to have principally protected, the actual investments being utilized, and the actual construction of a portfolio that makes sense for you. Because as I said, creditors don't accept the dog ate my homework. 5 creditors who don't care whether or not the stock market is doing bad. Number 1, the gas and electric company. Number 2, the water company. Number 3, your mortgage servicer. Number 4, your auto provider. And number 5, Whole Foods, which I know you might say it costs a whole paycheck, but you get the idea, groceries. Those are 5 creditors who could care less that the stock market is bouncing up and down like a bowling ball for Sam, who has remained in the C fund. Well, as I said before, if you are age 60 and older, if you are much like Sam, who, by the way, has neither the skill, the will, the time, the expertise, or the experience to self-manage a portfolio, then why don't we sit down and have not only a complimentary consultation, but a complimentary consultation in which we actually make sure that you have a portfolio that makes sense. Most of all, a portfolio and a plan, because what are the 4 ingredients that we need in order to have a successful retirement? Number 1, education. Number 2, planning. Number 3, advice. And number 4, strategy. It's all about addressing the problems that you need to solve in order to have a tax-free, stress-free, and happy retirement. How do we do that? Let's sit down. The number is 866-621-6660. Again, that number is 866-621-6660. If you like to text us, if that's easier for you, then certainly feel free to text. The number is 301-900-5758. Once again, you can text the word tax, T-A-X, to 301-900-5758. In case you have just joined us, you, of course, are listening to the Tax Efficient Retirement Planning Show. I am your host, Karen Scott Mims, tax attorney, registered investment advisor, representative, accountant, estate planner, and certainly my favorite role, private wealth and tax advisor. Our show for today is entitled, What the Health is 45 Doing? We're talking about the necessity for an all-weather portfolio. So, we're going to take a break right now. When we come back, you know what we're going to talk about. My favorite subject, Zero is My Hero, the 0% tax bracket, and how Sam incorporates all of this into a plan. Don't go anywhere. We'll be right back.
Of all the questions you get asked every day, this is one you shouldn't ignore. how much money in your 401k or IRA is actually yours. Not what its current value is, but how much of it will end up in your pockets, not the government's. Remember, you still might owe taxes on that money. And how about tax efficiency? Are you overpaying, or are you keeping every dollar you're entitled to? Look, I know it's confusing, it's complicated, and it definitely isn't fun. That's why Harbor Point Wealth Management works to help make sure you aren't paying more in taxes than your fair share. They have a complimentary report to help make sense of taxes and how they can impact your retirement. Get it today. It's your money. You deserve to know what's at stake. Don't do the IRS any favors. Get your complimentary tax report from Karen Scott Mims and Harbor Point Wealth Management today. Just text the word tax to 301-900-5758. That's the word tax. Text it to 301-900-5758. Investment advisory services offered through Brookstone Capital Management, LLC, a registered investment advisor. BCM and Harbor Point Wealth Management are independent of each other.
Welcome back to the Tax Smart Tax Zero podcast. And now, your host, noted tax attorney and private wealth strategist, Karen Scott Mims, Esquire.
Welcome back to the second half of the Tax Efficient Retirement Planning Show. I am your host, Karen Scott Mims. Thank you so much for joining us today. Well, in this second half of the show, you know what we like to call this tax liabilities and the loopholes that erase them. Because in this half of the show, as is our whole philosophy, is that we're talking about zero is my hero. So what do I mean when I say zero is my hero? Well, it's the name of our tax study group, but more importantly, zero is my hero is the concept of being in the 0% tax bracket. So if you're a first-time listener to the show, let me say welcome, but let me also introduce you to a very different philosophy and way of thinking. Number one, how about if we take a holistic approach to your wealth that goes beyond your portfolio? Some would say that it's just going beyond acting as though the C fund is a plan, because it's not. Number two, the concept of comprehensive wealth management, which means a coordinated effort of all of the types of issues. Here, we like to say that we have 20 modules of services, and let me go over them very briefly with you. Number one, investment. Number two, long-term care. Number three, estate planning. We have to start the process or thinking about the process of transferring multi-generational wealth. Number four, Social Security. And number five, Medicare. By the way, I know you see those as benefits that are taxed to you. Yes, benefits that are taxed to you. You paid into a system, and right, i.e. a Social Security and a Medicare tax. But my question becomes, why are they taxed twice when they're ultimately dispersed to you? That's something we've got to put an end to. Number six, asset protection. Number seven, real estate. Real estate in retirement has capital gains issues, right? Either the sale of the principal residence or the sale of rentals, they're each going to have capital gains issues for you, right? Number eight, cash flow and budgeting. Number nine, risk management. And number 10, taxation. Those are modules 1 through 10. And then we have modules 11 through 13. They are nuanced scenarios, right, that have special tax considerations. And we have 5 categories. Number 1, physicians. Number 2, small business owners. Number 3, real estate investors. Number 4, executives that have stock options or non-qualified deferred compensation, or federal government employees. Doesn't matter whether you're FERS, CSRS, CSRS offset, FEHB, FEGLI, and FLTSIP are still going to be issues. And then modules 14 through 20, they are the IRA expertise, because you should understand that the tax laws are very different for your qualified employer plan, whether it's the TSP, a 401k, a 403b, or a 457. The tax laws are very different for qualified employer plans versus IRA. And they are even more complex when you're talking about having a spouse versus a non-spouse beneficiary, right? So the real issue, as I said, becomes taxation. And it's not what you make, it's what you get to keep. So a high double-digit 25-30% return, it means nothing when you still have that 60-40 split. And when I say that 60-40 split, remember, Sam had saved $1 million in that TSP. 60% or $600,000 belonged to him. The other 40% belonged to the IRS, right? That's your business partner in the TSP, your business partner in your 401k, 403b, or 457. Your business partner is the IRS. And you have to start thinking about divorcing Uncle Sam as the primary beneficiary of, again, your TSP, 401k, 403b, 457, or IRA. That is critical. it is also critical that you understand the difference between those tax buckets. It's time to reposition your wealth from the tax-deferred bucket, in which you have a partnership with the IRS, to the tax-free bucket, and hence the name Zero is My Hero. Because when I talk about Zero is My Hero, I'm talking about the path to the 0% tax bracket. You need to have a 0% income tax bracket, a 0% capital gains bracket, a 0% estate tax bracket, a 0% excise tax bracket, and a 0% inheritance tax bracket. Because let's face it, there are two tax systems in this country, one for the wealthy and the other system for everyone else, i.e. the other people. But I will say to you, our system has and is failing us because the wealthy don't pay taxes, right? Their share is being paid by the middle class. If you're an LILA, low income, low asset person, right? You don't really pay taxes either. Your share is being paid by the middle class. So wait a minute, if I'm in the middle class, shouldn't I sit down and realize that it's extremely important and appropriate that I divorce Uncle Sam? In case you have just joined us, you of course are listening to the Tax Efficient Retirement Planning Show. I am your host, Karen Scott Mims, tax attorney, registered investment advisor representative, accountant, estate planner, and certainly my favorite role, private wealth and tax advisor. So our show for today is entitled, What the Health is 45 Doing? The Necessity of an All-Weather Portfolio. This all started because, as I said, we are in the midst of a global pandemic. We have the oil war between the Saudis and Russia. We have a stock market that is having a very violent reaction to the coronavirus. We have a Fed that has lowered the rate. And we have a potential economic crisis as businesses shut down for who knows how long. Employers are having to shut down. Employees are not going to get paid. And gosh darn it, in the midst of all this, airlines are asking for a bailout. But here's something really important. The potential legislation that would give everyone a couple of weeks of vacation, allow them to extend FMLA. Do you understand that noticeably there is an exclusion for employers that have 500 or more employees? Once again, all of the legislation, much like the Tax Cuts and Jobs Act of 2018, much like the Secure Act that became effective on January 1st of this year, all of the legislation seems to favor the wealthy. What about the average middle class person who has worked very hard, but unfortunately has saved in their qualified employer plan with mutual funds as their only option and hasn't realized the true effect of having tax deferred money? My answer to that is that we need to have some tax-free money. That's what it's all about. When I talk about being in the 0% tax bracket, the whole idea is that we need to understand the war is against the middle class. We need to have an answer to it. We can't just sit back and say that everything is going to be fine because, quite frankly, it's not. Okay? In case you have just joined us, you, of course, are listening to the Tax Efficient Retirement Planning Show. I am guiding you up to and through retirement, but most importantly, I'm addressing the real issue that needs to be addressed. We are suffering and the system is failing us. And the question becomes, are we going to continue to focus and act like the portfolio is the only thing that matters, or are we going to start solving the problem? Well, I can say to you, if we are going to solve the problem, we're going to have to answer a very simple question. Let's start with that. Are we paying too much in taxes? Of course you are, because you're not in the 0% tax bracket. Again, Zero is My Hero. I'm talking about a 0% income tax, 0% capital gains tax, 0% estate tax, 0% excise tax, and a 0% inheritance tax. And so how are we going to solve the problem? Yeah, because what's happening is that you're making financial decisions without exposure. You're relying on people who don't have, in reality, the education, the expertise, the experience, and the ethics to provide you with the exposure that you need in order to be able to have holistic and comprehensive wealth management. Because after all, the issue is taxation. And the issue is that you need to have a plan for the distribution phase, because these are basic questions. From which bucket and in which order do I take my money in the distribution phase of my financial life? From which bucket and in which order do I take the money that produces the least amount of taxes? And last but not least, how do I use the 4 ingredients? Those are education, planning, advice, and strategy in order to get into the 0% tax bracket. Well, in the last couple of minutes that we have left, I will remind you that you are listening to Tax Efficient Retirement Planning Show. I am your host, Karen Scott Mims. I am all about having you in the 0% tax bracket. I'm all about divorcing Uncle Sam as the primary beneficiary of your TSP, 401k, 403b, 457, or IRA. Education is the key to that. So let me tell you, first of all, our number here is 866-621-6660. Again, that number is 866-621-6660. If we're going to start with the idea of having you be in the 0% tax bracket, and as we kind of talked about today for Sam, having you have, right, a portfolio that makes sense. I like to call it the necessity for an all-weather portfolio. Let's talk about how we go about educating you. Well, number one, you can certainly sign up for our bi-monthly newsletters, right, to better educate yourself. Number two, you can sign up for our weekly electronic newsletters. Number three, we have a monthly webinar. It's called Ask Tax ESQ. We actually have live Q&A sessions at the end. Number four, you can ask about our tax study group, Zero is My Hero. We hold that every month. We talk about more complex, advanced, and sophisticated tax strategies. Number five, you can certainly join us at any of our seminars where we talk about not only taxation, we talk about Social Security, Medicare, estate planning, and estate administration issues. What do we do when that relative dies and all of a sudden something hits the fan? And number six, that is going to be all about Medicare, because I think that's a bigger issue that's not being addressed. In case you have just joined us, you, of course, are listening to the Tax Efficient Retirement Planning Show. I am your host, Karen Scott Mims, better known and affectionately known as your Tax ESQ. We're coming to you to talk about what? About the 0% tax bracket, but most of all, to talk about taking a holistic approach to your wealth. As I said before, our show today is entitled, What the Health is 45 Doing? We're in the midst, here we sit, a global pandemic, the oil war between the Saudis and Russia, the stock market is having a very violent reaction, and on top of all that, Sam is trying to retire, and Sam is now starting to realize that while the C fund may have served him in the accumulation stage, it does not in the distribution stage. It does not serve him in the preservation stage. So if you are like Sam, you need some advice, not just the sale of a product, give us a call. The number is 866-621-6660. Again, that number is 866-621-6660. If it's easier to text me, please do that. The number is 301-900-5758. I'm your host, Karen Scott Mims. Thank you so much for joining us today. I will say to you, Barbara, if you've joined us and are listening, get back to work.
This concludes another episode of the Tax Smart Tax Zero podcast. Get ready to create tax-free wealth and start on the path to the 0% tax bracket. To receive your Tax Smart Tax Zero toolkit, you can reach us by telephone at 866-621-6660 or text the word TAX to 301-900-5758. Or send an email to tax@taxsmarttaxzero.com. Want to attend our virtual seminar, Guide to Tax Minimization, Estate Planning, and Passive Real Estate Income? Text the word seminar to 301-900-5758. Send an email to seminar@taxsmarttaxzero.com and we'll register you and also keep you updated of all future virtual seminar dates and times. Don't forget to visit taxsmarttaxzero.com and on our YouTube channel. There, you can like us and subscribe to learn more about our tax study group, Zero is My Hero, or attend our upcoming webinars. Follow us on Facebook. And as always, sign up for our monthly tax newsletter and divorce Uncle Sam as the primary beneficiary of your wealth. Join us next week for another episode of Tax Smart Tax Zero, the path to the 0% tax bracket.